so in love with you.
You guys, welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. It's how to make money during a recession. Now, I've already learned my hard lessons, you guys. This time around, I'm going to make money and I want you to make money also. Now, here's the crazy thing about it. There are still people around that cannot fathom just the possibility of a recession, right? Now, obviously, I don't have a crystal ball. This is just my opinion, and it's important to know that I am not a financial advisor, but not only do I think a recession is possible, I think a recession is highly, highly likely. So what we're going to do today is we're going to talk about a few things. Number one, we're going to talk about what is a recession. Number two, we're going to talk about what factors that we need to see in order for a recession to come. And number three, we're going to talk about how to make money in a recession, whether it's in the stock market or whether it's in what I really love, real estate. So y'all sit tight. Now, before I continue, do me a favor, guys, hit like on this video, comment, share it, and subscribe to my channel if you haven't already. Now, you guys, it's not always a bad thing to be in a recession. In fact, if you prepare now, you can actually make a ton of money during a recession. And that's what I plan on doing. That's kind of why my whole channel exists, is because I want to help empower people through education. And it's also important to note that these are just my opinions. There's a ton of other opinions. I suggest everyone go out there and search how to make money on a recession, what a recession is, and basically just set up your life so that you can be ahead during a recession. The problem with the recession and why it hurts so many people is people do not prepare for a recession and they live life beyond their means. And I don't want any of my listeners to do that. Now, let's talk about what is a recession anyways. Now, overall what a recession is, it's 2 consecutive quarters of declining GDP. Okay, so essentially there's less spending, and what happens is the economy starts contracting. But I'm going to get a little bit more detailed. That's a simple version, 2 consecutive quarters of a declining GDP. But let's take a look at a bigger definition of what a recession is right now. Okay, guys, so as you can see, this is the NBER's definition of a recession, and it's a little bit more detailed. I'm a little bit simpler, as you guys can tell. I'm not really this maniac educated economist. I kind of learn from my experiences and from the failures of my life and other people's. Now, here it is. Now, the definition emphasizes that a recession involves a significant decline in economic activity that is spread across the economy and lasts more than a few months, 2 quarters, right? 6 months. In our interpretation of this definition, we treat the 3 criteria, depth, diffusion, and duration, on somewhat interchangeable. That is, while each criterion needs to be met individually to some degree, extreme conditions revealed by one criterion may partially offset weaker indications from another. For example, in the case of February 2020 peak in economic activity, the committee concluded that a subsequent drop in activity had been so great and so widely diffused throughout the economy that, even if prolonged to be quite brief, the downturn should be classified as a recession. Now, what this is indicating, guys, is the US's very shortest recession, which was during COVID for 2 months. We had a 2-month recession in 2020 during the lockdowns of COVID. A lot of people don't realize that we've already had recently a recession. It was the shortest recession. The longest recession was 18 months. So, you guys, here's the thing. Don't be scared of a recession. In fact, prepare for it. It could be the best thing to ever happen to you. If you don't prepare for it, understand that the longest recession was only 18 months. So that's the definition of a recession. As I get into the indicators of a recession, what I want to point out is since 1940, there have actually been 12 recessions. So let's talk about the indicators of a recession right now, starting with the number one thing, increased energy costs. Now, generally, increased energy costs will lead to recession like oil, because our everyday activity generally has to do with oil, traveling, profits for small businesses. And you guys, take a look at oil right now. Okay, I'm going to pull up a chart right now. Take a look at this. As you can see here, this is a 1-year projection of crude oil prices. And as you can see, we have recently spiked. There has been a sudden increase in energy, which again is one of the indicators of a coming recession. The hard part about whether or not we are in a recession, because it's 2 back-to-back quarters of declining GDP, we won't know if we're in a recession economically, scientifically, until we've had 6 months transpire. The key is to understand we are in a recession before we're technically in a recession. So quite frankly, guys, we can be in a recession right now. So that was the number one thing. Energy increase drastically like oil. Here's another thing. Increased interest rates. Now, as you guys know, a couple days ago, the Federal Reserve started increasing interest rates. I'm going to show you the graph right now. All right, here's the graph from Freddie Mac on the average 30-year fixed rate mortgages. This is over a 1 year, 3 month period of time. As you can see here, we have had a drastic increase in interest rates. It's still pretty low, but it's now the national average of 4.16%, and that is only going up. It has just been the start of the increase in interest rates, but as you guys can see, the interest rates are definitely going up, which is another indicator that we are headed possibly already in a recession. Now, another thing is I talked about government spending contracting, but another thing is a sell-off in the stock market. And that's one of the ways we can actually make money is generally before a recession, the stock market peaks 6 months prior to a recession. Now, if you guys have noticed, there has been a sell-off in the stock market, which could possibly indicate a coming recession, because during a recession, it is time to make money in the stock market. So I'll go over that in a second here. So really what I want to focus on now, guys, is the great inverted yield curve. And the inverted yield curve is a very strong indicator of a coming recession. In fact, it has accurately predicted 9 recessions since 1955. 9 recessions have been predicted based on an inverted yield curve alone. And what I want to explain is it has to do with the US Treasuries. Okay, so essentially when the 2-year Treasury is higher than the 10-year Treasury, we have an inverted yield curve, and we are likely in a recession. So I'm going to bring up today's yields right now, and we're going to take a look at where are we at in all that. Is it flattening? Is it inverted yet? Take a look at this. I think you're going to find it's very interesting. All right, here's the yields right now. And as you can see, this is as of the 18th at 1:16 p.m. Eastern time. Now look at this. Here's the 10-year, okay? The 5-year is already over the 10-year, and the 3-year is already over the 10-year, you guys. I'm going to calm down now, but do you see what's coming now? The 2-year is at 1.99, so it's not over the 10-year yet. So the inverted yields, the inverted yields is not there yet. That sign of the recession is not there yet. But look at the 5-year and look at the 3-year. It's already over the 10-year. You guys, this is a sign of things to come. So if you're an economist, you don't think the recession is going to come. Why don't you think it's going to come? Look at all of the factors that I've just listed that are obvious indicators of a recession. So you guys, overall, I wanted to keep it simple. Those are the indicators of a recession. That's why I'm always talking about there's probably a recession. I'm pretty certain there's going to be a recession coming. And when the recession comes, job losses, people can't afford things, money tightens up, house market usually crashes. But here's the thing, like I said, you guys don't have to be one of the normal people that is going to get hurt during a recession if you just prepare, if you just tighten up right now. But let's talk about the stock market and how to make money in it. Now, like I said, it's very important, you guys, that you note that generally during a recession, the stock market does not decline. In fact, it has been reported over and over and over the last 12 recessions that the stock market actually increases during a recession. Okay, think about that, because the sell-off generally begins prior to the recession, which makes it hard for most people to decide when they should invest in the stock market, because they don't know we're in a recession while we're in a recession. But remember, generally stock market peaks 6 months prior to the recession, okay? Now, here's the interesting thing. From 1869 to 2018, there's been an average of over 9% increase during the recession in the stock market, which means is if we can have someone tell us right now that we are in a recession, generally it's a smart time to invest in the stock market. But remember, I'm not a financial advisor. This is just my opinion. This is just the data. Now, here's what's crazy about the stock market. After a recession ends, on every single recession for a 3-year period of time, so 3 years after a recession, after every single recession, the stock market has gone up an average of, you ready for this? 40%. It has gone up an average of 40%. So I don't know if you're excited, but you guys, I'm pretty excited over here because I've been saving my money. I've been living frugally. I'm renting right now and I hate renting, but I am preparing myself. So if we're in a recession, if we can call that recession, generally it's a smart idea to start investing in the stock market, because every single time within 3 years, or at the 3-year mark, an average of a 40% come up on your money. The trick will be to find out what stocks to invest in, and that's where I can't really help you with, okay? Isn't that amazing? So in other words, if you plan now, right? If you take your time, if you stay patient, if you build your credit worthiness, you guys can make a lot of money. But let's talk now about the housing market. Now, here's what's important, okay? What I want you to do right now, as we go into a possible recession and a downturn in the housing market, what you need to be doing is make sure your credit worthiness is super strong and that you have money, because unfortunately, what will happen to most people is they're going to get hurt, because most people, they're not empowering themselves by watching YouTube videos, okay? They're doing their everyday thing, stuck in the rat race, overspending, spending beyond their means in heavy credit card debt. And it is because of that that a lot of people are going to be hurt and are not going to be prepared. And unfortunately, what that's going to do is it's going to lead to job loss. It's going to lead to foreclosures. And what that does in turn is it brings opportunity to the people that have been preparing, like myself. I'm not trying to get rich off of other people's pain. But what I'm saying is, if you do prepare, you don't have to be one of those people. And sadly, most people in the US are not prepared for this. But again, that's why I have my channel. That's why I want you to listen to my channel, because I want you to equip yourself so that you can make money, that you don't have to be like one of these people that suffer. So what happens, you guys, during a recession? Typically, companies lose money. When companies lose money, it puts strain on the job market, and it puts more pressure on the sellers to need to move out of their house to go back to renting, because renting right now is cheaper than owning. So a lot of times sellers are going to start needing to move. Also, investors are not as heavily in the market. So again, that's going to create opportunity for us to pick up fixer-uppers. You guys want fixer-uppers because fixer-uppers are generally under market value. You want to find properties that are under market value. And if you purchase property, we need buyer's incentives like paying closing costs and things of that nature. Every home that I have owned, I have never paid closing costs out of the 4 homes that I've owned. I won't pay closing costs. I refuse. Closing costs can be super expensive. Why would I pay them if the seller can, and I can work that into the negotiation of the purchase of the house? Do you see what I'm saying? So during the recession, that's probably going to put a damper on our housing market. And it's at that time when the housing market turns into a buyer's market from a very toxic seller's market that we've been having the last 2 years. Now, remember, the housing market in 2022, well, specifically 2020 and 2021, is there because of what? What reason? Why do we have this amazing housing market? Okay, it's unlike 2008. The reason is free money and low interest rates. So we don't know how fast the housing market is going to crumble. We don't have low interest rates anymore. And I mean low, like 2 and 3%. And we don't have free money like stimulus and PPP loans for small businesses. You guys, things are contracting. Things are going to start getting worse for everyday people, but it doesn't have to for you. So my overall opinion, you guys, is what it always is. Number 1, enjoy your family. Number 2, sit out right now. Number 3, save as much money as possible by rebudgeting and shedding off the fat of things you don't need to be doing. Number 4, what I really want you guys to focus on is your credit worthiness, because when it turns into a buyer's market and a recession, we need to have excellent credit so that we can get good loans to buy real estate and rent it out or buy a primary residence. Mortgage debt is better than revolving debt like credit card debt, okay? So I want you guys to get out of consumer debt as well. Now that's gonna wrap this video up, you guys. I hope you learned a lot. I hope you're getting excited because you're prepared. You shouldn't be excited, just, normal people aren't gonna get excited because of recession, but people will get excited that are prepared for that downturn in the economy. Now, as always, guys, I wish you the absolute best luck out there, and I hope you win.